Welcome back. As promised, it is time to talk about the fundamentals of this market. We have Jigar Mistry of Buoyant Capital joining in for exactly that. So, Jigar, it was a bit of a shakeout and fear factor for the bulls on Monday, but now the market seems to have kind of moved on. What do you make of things, and are you expecting a significant, deeper correction because of these new corona fears?
Good afternoon, Surbi. I think what had happened on Monday, I think, is a good sign, essentially. Somebody told me that we had almost $1 billion worth of FNO retail wind down, and retail shareholders have been the smartest among the lot so far. FIIs were selling in the month of March, and they are buying, big time in the month of November and December. And I think if some positions got unwound in the scare, I think it only goes on to make the market a little bit healthy. Onto the broader question, I think, the emerging markets have been underperforming vis-a-vis the US for almost a decade now. And we've seen a lot of central banks become a little more tolerant of inflation, which includes RBI as well, right? You saw the monetary policy projecting inflation at 6.8% versus 7.5 that we already have. So I think they are all committing to the liquidity being more or less in surplus. And therefore, I think it will continue to flow to all interesting asset classes, which we haven't seen for a while. So commodities, real hard assets, even after the spectacular rise that you see, the Bloomberg Commodity Index is still at only 1998 sort of levels. So that is happening. Emerging markets are seeing flows, and these stories don't die off in a few months. So I think we essentially believe that from the flow side, there is still some amount of legs to go. What's happening in the domestic mutual fund industry is also very interesting. So, you're seeing a decent amount of outflows in November as well as in December. But I think it's a more do-it-yourself approach with retail shareholders are following. So they're trying to invest their money themselves, and which isn't essentially a bad thing. But I think from the flows perspective, it doesn't mean money is moving out of the equity markets. From a fundamental standpoint, again, we're seeing a lot of our memory serves us in the last 5 years, and we have seen a particular pattern essentially because last 5 years, the real economy went through a lot of pain. We saw the bank AQR, Demon, GST, NBFC crisis, and COVID. And through all of this, the consumption sector was the first to bounce back. The growth that it continued to show, albeit at a lower level, still got a scarcity premium. So I think when things turn, we'll come out of this 5 year sort of thawing thought processes, and we'll go on to focus on sector rotations. We'll go on to focus on market cap rotations, growth versus value debate, and I think that is something to look forward to.
Jigar, hi, welcome to the show. I wanted to specifically ask you about real estate stocks. We spoke to the management of Puravankara, who said that they're getting investment of over 500 crores into the company. They've seen traction in both affordable as well as luxury housing. Debt is going to come down. And not to mention that they've managed to increase prices also in a couple of their projects by 2 to 5 odd %. Give us a sense in terms of whether you like real estate companies, any stocks which would be on your radar.
Hello, Ekta. Good afternoon. No, so you are right. I think, not just the companies telling us, but when you look at the domestic registrations, you look at what's happening on the ground, you're seeing some amount of activity come in. And I think whatever our discussions that have been with companies, there could be 2 or 3 factors to this. One is clearly that people who are waiting on the sidelines effectively gave in and said, look, whatever crisis we are expecting that's happened, real estate has underperformed for 10 years. And therefore, we'll go ahead and just buy something. And a few, in the metros especially, you are having people now think of a few rooms where they can actually turn those into working from home rooms, because that's apparently the new reality all of us will have to work with. That is happening. And also, in the lockdown, whatever registrations couldn't happen, all of that are getting bunched in as well. So it's an interesting space. It's something that we are very effectively sort of evaluating. We haven't zeroed in on a real estate stock. We are currently playing it only through peripheries, which are essentially, cement, tiles, home improvement companies. But real estate is something we will look forward to get a couple of months of more data just to understand if there is really a change in trend or this bunch of pent up demand issues which flitter out. So a couple of months will sort of be very interesting in how this pans out.
Okay. I do want to talk to you about metals and some interesting choices in your portfolio as well. I mean, metals have been on a tear, Jigar, right? We've known that thanks to this whole global rally. Now, among other stocks, I think you like Vedanta. Correct me if I'm wrong. And that's interesting because it's in a sort of diversified base metals play. But there have been enough questions about, what the company is going to do. The delisting didn't go through. I think one of the rating agencies downgraded at least a portion of its debt. So how do you put all these things together and what's the rationale behind Vedanta?
I think the rating agency downgraded the parent level, which, it's a parent, so doesn't impact the operating entity. See, what's interesting with Vedanta is that it has exposure to a lot of things. And it's at the marginal cost of production, also with a lot of commodities. So with aluminium, they don't have bauxite, right? But a $200 sort of increase in aluminium prices gives them the $200 incremental EBITDA, which is a lot. So if you do the sum of the parts, the value is much, much higher. I think what ends up happening is because of the failed delisting attempt, because of the failed sort of issues around the company in the past, there have been some questions which effectively account for the price and the upside that it offers. I think sort of it's a very reasonable sort of stock to own. What's happening with the other commodities also is interesting. Right now with the cement companies, I think it was your channel that reported that there was a big CCI raid, and I think the amount of increase that they are taking is something that the ministry is not very happy with.
Okay.
I think the similar goes for steel as well. So I think if you want to be in the commodity space, I think the non-ferrous bit is a lot more interesting.
Okay, all right, Jigar, we're going to leave it on that note. Thanks very much for joining in and giving us that perspective. For the market steady, we're going to take a break and focus on some buzzing stocks on the other side. Stay tuned.